Let's talk from a market's perspective, of course, some of the budget winners and losers. James Gerrish from Shaw and Partners. James, good morning to you. Look, I know we always give a lot of thought to what the budget means, but at a top level, I mean, this is not particularly inflationary. This is not particularly stimulative. So what's your verdict on budget 2023?
Yeah, good morning to you, Nadine. We always sit here on the day after budget and try and pick the winners and losers in terms of the market. I guess the bigger picture standpoint would say if you liken it to a stock, the budget is in upgrade cycle. So in October 22, we came out and thought that the budget was going to be in the black by about 50 billion. It now looks to be better off by about 126 billion over the next 5 years. So that's a positive undertone to the budget. But if you're thinking about the key areas and stocks and sectors that it will benefit, I don't think this budget changes the way we're approaching the markets. It doesn't change the stocks or sectors that we're investing in. But of course, there are going to be a couple of things that could turn the dial on specific stocks out there, given the specific policies that have been announced.
Okay, so I've been doing a bit of reading, obviously, this morning as well, a little bit of chatting in the newsroom. So we do have some relief, very targeted relief, going to lower income households. Now, I was just speaking with Amy Oster, chief economist of PwC, who said, look, it's not inflationary because these people are not going to be going out and buying big ticket items. They're not going to be going out and splashing on plasma TVs. But as we continue to see, cost of living biting, could we see this sort of trade down to more value, but also, some of those that had that targeted relief spending in any particular way?
Yeah, so I think a couple of good points there. So not big ticket items, but small ticket items. So you think about the retailers that sell those sorts of things. So Super Retail Group would be a beneficiary there. That's probably the one I'd highlight in that space. Coles in the supermarket area. So we know Woolies is more tailored to the affluent part of the market. Coles is more of the area that perhaps are getting more support out of this budget. So Coles could be a net beneficiary. Domino's would be another area where it could be a beneficiary of lower income earners having more money in their pocket. So there's a few areas out there. I don't think they'll turn the dial meaningfully on these stocks in the near term, but there are more positive undertones than the negative ones out of it, Nadine.
Okay, so if we think about some of the other key components of the budget, we've got a lot of migrants coming in. That's one thing to keep in mind. The Property Council was endorsing some of the government's efforts in terms of the build to rent segment, some incentives to get people building. Overall, he said that particularly the migration piece was going to be pretty good for the property market. Do you agree?
Yeah, I think that the migration is a big one. So they're expecting 1.5 million new migrants coming into the country. Population is good for obviously demand for housing and the like, but it's also population growth underpins essential services like Telstra, for instance. So people using phone networks, TPG, and the like. You made mention of build to rent schemes. So Mirvac, Lendlease would be examples of companies that perhaps would benefit there in terms of first home buyer support and improvements in that part of the market. You think of an AB Jennings, you think of a Stockland in that sort of environment. But as I said before, I don't think they're going to be meaningful movements in these stock prices today on the back of this budget. But it is something for investors to keep in the back of their minds as another supporting factor. Just on the migration, I think skill shortages have been a major issue in a number of sectors: healthcare, childcare, construction, and the like. So I think that's going to be a real win in those sort of areas. So we had Worley Parsons with a strategy update yesterday, articulating their pathway for growth and taking advantage of this massive move to decarbonisation. But it takes people and it takes skills. So skill migration is going to be a benefit for companies like that.
We often talk about healthcare in relation to the budget. So we've had some money going into bulk billing, but that again is very targeted relief when it comes to families, in particular low-income households. We have had some movement coming through in terms of cheaper prescriptions None of that sounds to me like it's particularly stimulative to the healthcare space, or am I reading it wrong?
Well, if you think about more people going to the doctors because they can get bulk billed, then you're going to have more doctors referring them on to getting further tests, imaging and the like. So that would help imaging companies. So Capital Health would be an example of that. CAJ is an example of a company that would benefit out of the back of more people going and getting X-rays and the like. So that's one beneficiary there. Yeah, we're probably, we're digging down into the weeds now in terms of what all this means and whether or not you make a good point around whether or not it translates into the numbers that the budget that the government is saying they will. So there's still, the GPs, for instance, in that instance, they've still got to be prepared to bulk bill, and we know that's they earn more if they don't bulk bill. So it's still a commercial decision to be made from GPs themselves.
All right, so that is some of the potential winners and losers. So we've got Domino's, Coles, Wesfarmers, Super Retail, everything Mirvac to Lend-Lease. But overall, I mean, sometimes are we grasping for straws when it comes to the winners and losers from this budget? And I'm not sort of casting shade on any of your ideas whatsoever. It's just that, it's not the main driver for any of these investment decisions. Just putting it out there.
You're 100% right, Nadine, and you can always cast a shadow over what I'm suggesting. Always prepared to be questioned and queried on it. So, I mean, we're out there trying to, pick the potential winners or losers. But ultimately, as I said at the start of the package, around, it doesn't change the way we're approaching the markets. I think from the sectors we want to be involved in, the stocks we want to be involved in, what it does from a broader monetary policy standpoint. I know the prior guest was talking that it's not a stimulatory budget, but I think it's, if you're on a quantum, I think it's more stimulatory than not. So it's more hawkish for the RBA than dovish for the RBA. I think that has some ramifications around future monetary policy. So in terms of, there was a big shift in the past week or so where the majority of forecasts were saying the RBA is now done and dusted in terms of rates, that the RBA cash rate is peaking at 3.85%, and we could ultimately see cuts this side of Christmas. I mean, CBA came out and said we're going to get an interest rate cut this side of Christmas. I'm not sure how the budget will change that forecasting around interest rates. To my way of thinking, I would have thought that it puts more upward pressure on interest rates than less. It's more inflationary than not. So obviously it's supportive of households and the like, but it also has a flow-on impact in terms of the inflationary pressures that we're seeing from a broader economic standpoint. So to me, it's probably got more upward bias around interest rates created from this budget than less.